Discussion now, and this one speaks to what's happening in the financial markets. And even if you don't follow the financial markets, you probably would have heard about the disastrous consequences of the GameStop short sell, and that hedge funds lost billions, and rookie traders actually made enormous gains. But what on earth does all of this mean to those of us who don't actually understand this? Well, it's been described as a David versus Goliath battle, and the little guy winning at this stage, and everybody loves to hear a story like that. But what does it actually mean? And also, news on the finance front from the Davos summit, the term stakeholder capital seems to be drawing quite a bit of the limelight. And what is the impact of all of this and on global economics, and how will it impact South Africa is perhaps what we're most concerned about. So to help us unpack this, we're joined now by Market Analyst Gary Booysen. Gary, thanks for your time. Welcome to Morning Live.
Yeah, thanks for having me on the show.
So let's start with the president's announcement last night. Do you believe that this heralds like a moment for South Africa to actually recover from the lockdown and all of the devastation that it's visited on our economy?
Yeah, I think it's definitely optimistic that we're seeing a lessening of the restrictions. We understand that it's always going to be a balancing act between lives and livelihoods. And I think everyone is going to, not everyone, but many people are going to welcome the sale of alcohol again. There is kind of a little bit of a subtext to that, I think, obviously with the pressure that the likes of AB InBev via SAB has been putting on the administration, just, reducing their foreign direct investment into South Africa. They consider the terms of the 2016 agreement when SAB merged with AB InBev as in breach by the South African authorities. And because of that, they were going to cut a significant amount of jobs and hold back on that foreign direct investment. So it's interesting that I suppose the alcohol ban has been lifted, but I think from a hospitality sector point of view, the restaurant owners and the people that really rely on alcohol sales to fund their lives and to make a living are going to definitely welcome it. And I think everyone's going to welcome a little bit of a lifting of the restrictions on the curfew and religious gatherings as well.
And I think that point cannot be overemphasized, Gary. You talk about the hospitality industry, the restaurants. Last week, I think it was our reporter Vanessa Puna did a very interesting piece on the bottling industry, glass bottling industry, and how they have also taken a knock as a result of the ban on alcohol, for example. But there's so much going on at the moment, Gary, and some of us have been following that GameStop saga involving Reddit users, Robinhood and Melvin Capital. But for those who haven't, if you could perhaps just explain in simple terms, what is short selling and why has the little guy been winning so far?
So it's difficult to explain this in simple terms, so I'll do my best. So essentially what happens with short selling is, almost anyone can short sell. It's not just the domain of hedge funds and these billionaires that the narrative is kind of explained. Many, with a very small account, 5,000 Rand, you can go and take short positions. So it's not limited to the large hedge funds, but essentially what you're doing, the mechanics of it is that you're borrowing shares from an institution that have shares basically being warehoused. This is maybe a pension fund. So if a pension fund was investing in GameStop, those shares sit with like a central depository or a bank or some other financial institution, and they're essentially not doing anything. So it allows the likes of hedge funds or anyone that has a short selling capability to go and borrow those shares and sell them into the markets at a price. Now, the reason that people do this is that they're hoping that the price will go down. So if you borrow some shares, you sell them at 10 Rand, you still have to deliver those shares back to your institution. So you're hoping that the share price is going to come down to, let's say, 5 Rand. You can then buy back all those shares that you own, and you'll make the difference between 5 Rand and 10 Rand for the number of shares that you bought. In the simplest terms, you're essentially betting. It's a mechanism that allows you to bet on company share prices falling.
Now, as a trader, Gary, we know that a certain percentage of pension funds, EFTs and other shares are obviously invested overseas and on the US markets. How is this GameStop debacle likely to affect the global economy and, of course, South Africa specifically?
So that's an interesting question. So with GameStop essentially is if the viewers don't know what it is, it's almost a defunct video game retailer. So GameStop is the place that people used to go to buy, video games before you could just download them online and pay with a credit card. So it is essentially a twilight business. You can think of it like Blockbusters was to a Netflix, and there's this new way of doing business. Now, what has materialized in this whole saga is that essentially a lot of people were short GameStop. This created a lot of short interest, which means that when you essentially buy up the shares, those hedge funds that have shorts now have to go and deliver that stock at a much higher level back to their institution. So they essentially have to buy back at higher prices. This creates what's called a short squeeze, and that's sent the share price rocketing. Now, to answer your question, South Africans wouldn't necessarily be affected by this because unless they had a direct position in GameStop or unless their pension funds had a direct position in GameStop, which is very, very unlikely. As I said, it's a defunct retailer. It's someone that very few people were investing in. The share price at one point was sub $5. As interest started to build in it, and interest started to build because people were, I suppose, assuming that they could turn around the company. It was about $20. Now, the short squeeze that I mentioned, where suddenly all these retail investors started buying it, the hedge funds started getting under pressure, and they needed to go and buy back the script so they could deliver it back to the institutions. That just created this really crazy bubble that sent GameStop, the US is slightly different, that they have pre-market trade where it's not actual market trade, but in pre-markets it was trading above $500 a share from sub $5. In 5 days there was about 1,000% return in the share. Now that isn't going to affect South Africans, but what it has done is it's taken a lot of the power away from these hedge funds, and there's this perception that the retail investor now has a lot more power in financial markets and the ability for retail investors to go and invest themselves. What really, I suppose, is going to the impact on South Africans is potentially a changing regulation around the way that investment takes place. So, many people have called this a pump and dump scheme, which is essentially it's an illegal form of trading that was very popular in the 80s, where people went and bought stock and then they would go and find retail investors that had very little idea of what was going on and then sell it to them at massively inflated prices, driving up the share prices and making very, very quick gains. So this isn't quite the same thing. Even though the retail investors are potentially going to get hurt, anyone that was buying GameStop in when the Reddit forum was encouraging retail investors, which created that share price spike, they did very well. They essentially beat the hedge funds. The very experienced managers lost money, and the retail investors gained money. The man on the street was the one who benefited. The problem is now that anyone that's kind of going and looking at GameStop and seeing it at $200-300 a share and thinking that they want to go and buy it at this stage, they are probably going to get hurt because the company won't be able to sustain itself. As I said, there's no real value underneath that company that could possibly justify a share price at that level. Now, what will happen is the SEC looks like it's going to probably regulate it. We had an example with Hertz a little while ago where, again, retail investors came out, they bid up the price of Hertz, the car rental company, even though it was essentially under huge pressure in COVID. Hertz tried to raise capital. Now, that's basically getting retail investors to give them money to fund the company, and the SEC blocked that. So it does look like we're going to see more stringent regulations. And now, when there's more stringent regulations around an industry like this, internationally, those regulations do tend to translate to the South African environment as well. So if we do see a limitation on retail investing from the SEC, you might see similar regulation coming into South Africa, but I think it's unlikely. The whole concept of financial markets is that there are free actors that are allowed to go and buy and sell shares, and there's this floating market price that anyone can participate in. And I think to remove that would really be to fundamentally change the way the financial system works. So I don't believe that we're going to see big regulatory changes, but certainly, it has been a very interesting week when a share price does 1,000% in 5 days.
Indeed, it is. Let's just talk Davos for a moment, Gary. Klaus Schwab, the founder and executive chairman of the World Economic Forum. Now, he's released a book at Davos called Stakeholder, Capitalism, a Global Economy That Works for Progress, People and the Planet. And it's co-authored by Peter Vanham. Now, in it, he says that the notion that a company has to make profits for its shareholders at any cost has now become detrimental to the planted and the lives of the people. And he's arguing that stakeholders like the workers, the suppliers, the customers, government, they should all have a say in the running of a business. And, what's your take on all of that? Because this may actually be ideal, some would argue, and perhaps in countries like South Korea, France, or Germany, and even some of the Nordic countries, it works to a certain extent. But is this what the world needs right now, do you think?
It's, again, a very, very difficult question to answer because there's so much. I mean, we could speak about this for hours and probably not get to the bottom of it. So, in a sense, you're absolutely right. Stakeholder capitalism is, in any business, let's start there. In any business, there's three stakeholders. There's the shareholders of the business, which are essentially owed the dividends and the capital, any capital appreciation in the share price. That's how they benefit. There's the management and the workers. So it's everyone that comprises the inside of the business. And there's the customers, which are the people that are essentially buying it. You mentioned government as well, but government sits as an external actor that's a more regulatory form. But those are essentially the three stakeholders in any business. Now, stakeholder capitalism, you could argue, is a little bit idealistic because to not maximize profits, but instead to maximize the well-being of all stakeholders. And when I said well-being of stakeholders, the 21 points of stakeholder capitalism, it's very ESG based. So it's, it's based on things like carbon emissions, and all sorts of environmental concerns, which in traditional economics form what's called the public good. It's things that are very difficult to price in a capitalist economy. So will it work? It remains to be seen. But I think it's an interesting idea and it's worth talking about because it potentially is the way forward. But considering those three stakeholders, the way that the modern economies work, a lot of that stakeholder capitalism is already being absorbed into it. So if you look at a company, if you look at any of the big US tech companies, for example, the idea of protecting your people within the company, it's very well established. The idea of delivering value to consumers, it's also very well established. If you're just out there to hammer your customers and not pay your workers right, in a capitalist economy these days, with the types of regulation that we have internationally, you won't succeed as a company because your shareholders won't be rewarded because your people won't work and your customers won't buy your product. So in a truly competitive environment, the stakeholders are essentially being taken care of. I think what stakeholder capitalism is really focusing on, though, it's those public goods. It's the environmental issues. It's diversity at board level, etc. Now, the problem with regulating too aggressively around those issues is that you essentially make the company a little bit more uncompetitive. You end up with a better society, but you end up with a less competitive company. Now, what we've seen is with globalization and the ability for companies to operate across different borders, if you have a country that is very focused on stakeholder capitalism and the environmental impact of their companies, another country that has a company that isn't as focused on that will probably be able to dominate that company. And the example is the big tech. Because of the nature of that US very traditional capitalism, they managed to create companies like Google and Amazon and Facebook, which essentially dominate the global economy. And companies that have more limited are going to struggle. So it's a wonderful idea, and I think it's something that will be explored, and I think it's going to develop in time, and is already developing. It's not as clear cut as this is just the silver bullet, and this is the way that we need to go in future. So they're definitely an interesting concept and worth exploring.
Well, Gary, let's leave it there for today. Thank you so much for speaking to us. Gary Booysen talking to us there about the GameStop short selling debacle, trying to help us understand, navigate that, and also the concept of stakeholder capitalism. And that was made mention of at the World Economic Forum at Davos, and has been, quite a buzz phrase out there as well. Right, we're going to park that there. Let's squeeze a few more tweets in.
Yeah.
And here's that question. In case you missed it, are you satisfied with the easing of certain lockdown restrictions announced by President Cyril Ramaphosa last night?
All right, and Nkosi saying, those who work in the alcohol business, how are they supposed to make a living and raise their children? For how long must they suffer? The problem is with alcohol, consumers who become violent and uncontrollable because of a lack of self-respect for others after